Good morning, sunshine.
Welcome to the real world. Whoa! Mortgage your house and buy Bitcoin with free air. There's no second best, okay?
GM. GM. Trade of the day. Wednesday. What fucking day is it? 11th? The 11th. So, this was the original breakout point. The highs of the breakdowns. That's where the main liquidity would have been resting. We've then pushed up further and really just filled a gap, if you can see here. So, price pushed right up into these highs, retested this breakdown level. And that is where we've topped so far, and with a retest. So, in terms of mean reversion, it has left one gap above, it has filled one below, and there are plenty of gaps below us the price can drop back down into, including this area here. Let me go into 1 hour and see, can we find some more untested areas. There's an untested area there. Here's an untested area on the way back up. So, there's gaps below. The gaps above don't really come into play until we reclaim that high above. And since on the lower time frames, we are currently bearish, showing a bearish reversal structure. As we head into CPI, which is at 12:30. There we go. We'll see how the market moves. Typically, when you have a preceding trend, it's going to most likely continue. Meaning, currently we have this downtrend. It's going to take a lot for the market to reverse that, unless it manages to reverse beforehand, which it could. If we move up and we are holding above, it could push higher, but seems unlikely at this point. Seems more like this might end up having to drop back for some more consolidation. At that point, we could still go higher. This can be, it doesn't have to be a strong trend. In fact, I don't think strong trends are going to be the feature of the rest of this bull market, where you see the market moving up nicely like this. I think it's going to be more of a filling back in of previous gaps each time. Even on the way down, we saw this. It is down moves, then it bounces, down moves, and then it bounces, and it bounces. So, whether it's going up or down, I don't think it's impossible for us to retrace all the way back to this original breakout point. And the CPI might be the catalyst for that today. I will go live and we'll trade it live on stream. So we'll cover it more there. But leading into it, I think what you want to view is the expectations of the market. Like I said on daily levels, there's a bit of an increased fear of recession / growth slowdown. And there's a lot of emphasis being put on, oh, it's all fine, liquidity is going to rise, it's all fine, interest rates are being cut. If the economy is slowing down to an extent that it goes into a recession, there are no instances of that being positive for risk assets in the near term. And obviously Bitcoin hasn't existed throughout any proper recessions. 2020 was barely a recession, and then they printed trillions to get out of it. But of course, don't forget, Bitcoin dropped like 60% before that. You know, it was only after that we saw that. So if you go back to 2020, which of course is not on Bybit, you can see it over here. So this was us plunging into a recession. And from the previous local highs, Bitcoin dropped 63%. Then we went into a recession briefly. Then they printed shitloads of money and we had this massive run. Every other recession, you have to obviously look at the S&P, not Bitcoin, because Bitcoin's only been around for 15 years. 2000, 2001, 2008 and beyond, all of those recessions led to significant declines in markets before a rally, right? So you get crushed out first. Deleveraging is the big word. And deleveraging is still the big risk. So when you talk about deleveraging, it's not just in crypto, it's in stock market as well. There's massive leverage in all these markets, because when you rise for long enough, leverage builds up. And stocks have been going up since October 2022. Crypto's been going up since November 2022 was the bottom. And you can see here, Bitcoin plus global open interest. If you look at both measures, we have significantly higher open interest. We have a lot of positioning that has entered the market. Just go to a weekly and we look from the lows. You know, we have open interest levels up significantly, up 279% on alts. There's not many alts that are up 279%. And some of them are, like Solana, etc. But many of them are not. They're back at their actual 2022 levels or 2023 open. or close to it. And Bitcoin open interest up 243%. Again, doing pretty well. Like price is probably up something similar from there, 260. So it's not too bad. But if the market has to roll over, some of this open interest will continue to decline and have to be deleveraged. And there's a lot of open interest build up as well on the CME, which is another 8 or 10 billion. And the simple way of looking at it is, if the economy avoids a recession, if the growth slowdown does not accelerate, then that's all going to be fine. And if they cut rates and print money going into a non-recession, that's moon. If they cut rates and print money because of economic slowdown towards recession, we go down first and then we go up. So today will give probably a hint about that. And so what you want to look at is the CPI number. The expectation is for a significant slowdown. The expectation for CPI today is 2.5%. Last month was 2.9. So that's a significant drop. We haven't seen those levels for years, literally years now. Last time that CPI was at 2.5 was, we have to go back to April, we have to go back to March 2021, right? And everything since then has been 4s and 5s and 7s, up as high as 9, and then back down and declining. Went to 3s. We got our first dip into the 2s last month. But inflation dropping too fast will increase fears of deflation. This is disinflation. It's not the same. Because if it's above 0, which 2.5 is obviously in all these, that's still inflation. That still means prices are rising, but they're rising at a slower rate than they were before. But if this comes in at 2.4, 2.3 today, you're going to see fears of it over-correcting. And that's where the expectation of, holy shit, this could go into the 1s. If it goes into the 1s and goes towards below 2, that's when you're looking at real growth scare, recessionary shock. And the markets will probably, markets will not react well to that, in my assumption, because they never have. Recessions have never been a bullish thing. And so that's going to be the big number. Join me for that. 12:30 UTC, I'll go live. See you then. GM.